Hi, I'm Nirmal and today we discuss about the components of employee compensation with benefits. So in this article we will discuss about these various components of employees compensation. Employee compensation is one of the most strategic and important functions of human resource management. It continues to evolve as a part of a system of all the combined rewards that employees offer to employees. So, components of compensation means components of remuneration to employees. An average employee is the organized sector is usually entitled to various benefits. Compensation is a payment made in cash to the employee in return of the contribution that he or she makes the organization. Compensation may have a base pay as well as various pay components. Salary and wages are most common form of compensation given to the employees. So some of the components of employees compensations are base pay structure, variable pay programs, number 3 benefits, 4 rewards and recognitions, 5 dearness allowances, 6 house rent allowances, 7 other allowances, 8 incentives, 9 fringe benefits or perquisites, wages and salary, non-monetary benefits, basic components of employee compensation and compensation management. Now we discuss about this. Components of a employee compensation base pay structure, variable pay programs, benefits, rewards and recognitions. It is important to understand the law of the land and taxation policy to understand the components of compensation and compensation strategies. Organizational always pay for the work done job and less for the individuals. Job is the nucleus for determining compensations. Each organization will have its own way to defining job and determining hierarchy of jobs. However, job for simplicity, the components of job shall look alike. So, base pay structure, fixed components, variable pay programs, benefits, rewards and recognitions. Now we discuss about the base pay structure, fixed components. Salaries and wages are the periodic assured payment made to the employees. Salaries are generally paid to the permanent employees on the monthly basis, whereas wages are paid to the temporary or contractual worker on the daily basis. Base pay is the fixed component and generally consists of the followings. Basic components. Normally 40% of the base pay is basic and rest of the base pay fall under various others categories. This breakage is governed by the law tax of the land. In India, for instance, in everything is given to an employee in the form of basic, the whole shall be taxed. Whereas if the base pay is broken into sub components like HRA, certain tax exemptions may be obtained. So now we discuss about the HRA, house rent allowances. Calculated as a percentage of basic, HRA limits are fixed by the government and are uniformly applicable. If a company decides to pay more than the limit decided by the company, it can, however, the excess shall be taxed as is the basic. If the company pays HRA components, then it must collect proofs of rent paid, rental receipts from the employee. Number 3, dear allowances. It is calculated as a percentage of basic. The payment of dearness allowances facilitate employees and workers to face the price increase or inflations of prices of goods and services. The onslaught of price increase has a major bearing on the living conditions of the labor. The increasing price reduce the compensation to nothing, and the money worth come down based on the level of inflation. The payment of dearness allowances, which may be fixed percentage on the basic wages, enable the employees to face the increasing prices. Number 4, leave travel allowances. Leave travel allowances or LTA is paid by certain companies. However, again, proofs of travel expenses must be collected by the company from the employees. Mobile expenses, components to variable pay programs. So, variable pay programs are generally classified differently for sales and non-sales. Variable pay plans for sales. Variable pay plans for sales represents a pay fix that may be 70 to 30 or 60 to 40 or 50-50 plans. Here the 30, 40 or 50 represents the variable portion of the pay and is like to targets. The targets could be product based, territory based, revenue based and profitability based or based on new business creations. So however, payment of the variable portions does not always follow a linear scales. Supposedly the target is USD 100 million of sales. It is possibly that till USD 50 million there may be no variable pay. If the person achieves USD 75 million, they are sold the threshold level, so then he or she maybe get 50% of the variable portions growing up to the 100% of the variable portions when he or she achieves USD 100 million in sales. Variable pay plans do not come with a upper cap, that is, if the same guy exceeds USD 100 million of the sales, he will get more than the plan as variable pay. Well, the answer is yes. Generally, a person is a 50 to 50 plan makes up to 70% or 80% variable pay. So, variable pay plans for sales. Now we discuss about this. Such pay plans are for those employees who either are those who need incentives to propel their work or other those whose performance can be improved by giving them incentives like insurance plans, credit cards, mutual funds, etc. So generally the variable portion in non-sales is lesser than in case of sales. The variable pay is based on the jobs and levels of jobs. Sometimes such plans may be covered under company-wide plans and the entire variable portion may be broken under employee performance, functional performance, that is, performance of the functions in each that employee works and organizational performance. The various variable pay components briefly have been discussed below. Now we discuss about this. Number 1, bonus. Bonus is generally post facto. The bonus can be paid in different ways. It can be fixed percentage on the basis wages paid annually or in portions to the profitability. The government also prescribes a minimum statutory bonus for all employees and workers. There are also a bonus plan which compensates the managers and employees based on the sales revenue or profit margin achieved. Bonus plans can also be based on pieces wages but depends upon the productivity of labor. Now we discuss about the commission. What is commission? Commission to managers and employees may be based on the sales revenue or profits of the company. It is always a fixed percentage on the target achieved for taxation purpose. Commission is again a taxable component of compensation. The payment of commissions as a component of compensation is practiced heavily in target-based sales. Depending upon the targets achieved, companies may pay a commission on a monthly or periodical basis. Fixed plans. Companies may also pay employees and others a combinations of pay as well as commissions. This plan is called combinations or fixed plans. Apart from the salaries paid, the employee may be eligible for a fixed percentage of commission upon achievement of fixed target of sales or profits or performance objectives. Nowadays, most of the corporate sector is following this practice. This is also termed as variable components of compensations. Now we discuss about the incentives. Incentives is clearly defined target related and upfront place rate and wages are relevant in the manufacturing wages. The laborers are paid wages for each of the quantity produced by them. The gross earning of the labor would be equivalent of number of goods produced by them. Piece rate wages improve productivity and is an absolute measurement of productivity to wage structures. The fairness of the compensation is totally based on the productivity and not by any subjective factor. The canned productivity planning and Taylor's plan of wages are examples of pieces rate wages and the related consequences. Sign on bonuses. So the latest trend in the compensation plans is the lump sum bonus for the income employees. A person who accept the others these pay a lump sum as a bonus, even though this practice is not relevant in most of the industries. Equity research and investment banking companies are paying sign on bonuses to attract scarce talent. So profit sharing payments. Profit sharing is again a novel concept nowadays. This can be paid through payment of cash or through ESOPs. This structuring of wages may be done in such a way that it attracts competitiveness and improve productivity. Stock options. Stock options are given to employees for two primary purposes. One of the have long-term interest of the employees and second to link individual performance to organizational performance. Generally, stock options may be given under the three categories. Number one, ESOPs or employee stock options. Number one. Number two, restricted stock units. Number three, employee stock purchase plans. Now we discuss about the employee stock options. So suppose an employee is given in the following way. An employee is given 2000 stocks of rupees 100% grand price. He is allowed to sell 50% of the stock after 2 years and the rest of the stocks after another 2 years. Let's say after 2 years the price of stock is rupees 110 vested price. Restricted stock units. So these are different of employee stock ESOPs. When stocks are given to the employees is deemed to zero values. So whatever is the stock price, the employee ends up making some money. Taking forward the earlier examples, if after 2 years of the price of stocks is rupees 90, then the employee will get 90,000 rupees on the trending his option. Employee stock purchase plans. This is more like benefits. When a company is doing well, then he gives option to employees to purchase shares on some discount. Components. Number three, benefits. The benefits could be one that are legally mandated ones or the ones that are good to have for competitive age. These benefits may be monetary or non-monetary, long terms or short terms, free or at the concessional rates, and may include education, housing, medical or recreational facilities provided individually and collectively inside or outside the organizational premises. The benefit should always be given with a genuine concern for the employee, and hence most of the benefits should be broad based and should uniformly apply to all the employees and must be designed keeping in mind the genuine benefit that it shall provide to the employees. This means that these benefits did not reach majority of the employees. The company tweaked the benefits slightly to the include of the employees' parents as well. The increased the value of the benefit considerably. Companies are increasingly taking the employees to a total reward perspective that involves considering base pay, variable pay, employees' benefits, and work-life balance together. Despite this is the benefits that a company provides to its employee have remained or minimum owing to the prevailing tough employee economic conditions. So now we discuss of the type of benefits. Pay time off, also referred to as PTO. They may be holidays governed by the law, leaves governed by the Shop Establishment Act, like casual leave, sick leaves, earned and privilege leaves, etc. Insurance programs may include health insurance, life insurance, personal accident insurance, disability insurance, family health insurance, etc. So, fringe benefits include a variety of non-cash payments that are used to attract and retain talented employees and may include educational assistance, flexibility, medical benefits, child care benefits, and non-production bonuses. So, for this video, and many thanks for watching my videos. So that's the end of the videos. My humble request is, if you like my videos, please subscribe, share, like, comments my MBA channel. Thanks a lot for watching.